Welcome everyone, let's get going and let's just wait for half a second. Okay, I'm ready. Right, let's talk about day trading oil. I'm just going to go through, I've only got 3 or 4 slides, so I'm not going to bore you with slides. I just want to talk about the basic strategies of trading oil and how to extract income from this terrific market. I've been day trading oil since 2005, and of course with this increase in volatility, the actual potential to extract decent income out of it is dramatically improved. If you're a day trader, you want volatility. And volatility is certainly what we got in oil. It's been really good. So let's go through some slides. As I go through this, by all means, type in any questions. You're all muted. If you want to ask a question, let me know and I'll unmute you. And it's a short presentation. I'm not going to take up a lot of your time. I just want to go through the basics, nice and simple, and then give you a chance to take a look at that. So just clear my throat a second. Right. So yeah, just a reminder of what we're facing here. It's all day trading, or trading in general, is a big mind game. So it's all about being in control, having a system and using the same system every day and expecting the same results. So I put in this quote because it's just one of thousands of quotes I've got, which I really like. Yeah, managing a state of mind is just one aspect of trading, but if you're going to manage your state of mind when you are in charge of your capital and you know, engaging with this market, you've got to go in with a system. The day you go in with a system is the day that you've got a high probability of winning a trade. So let's get going. So a little bit about me. I've traded, as I said, I've traded oil day futures since 2005. On average, I do 300 to 500 pips a week. I don't trade oil every single day. I've not traded oil today. There was a good trade, but I've been focusing on the Dow short because that's been so good. We've got OPEC meeting tomorrow. One of the reasons why I've not traded oil today is because we've got OPEC tomorrow, and inventories tomorrow as well. So I'll talk about the importance of inventories and how you can trade the invent announcement. Yeah, what are invents? Well, I'll talk about that in a minute as well. Okay, so disclaimer, trading carries risk. Don't trade with money you can't afford to lose, basically. You have to protect your capital at all times, and anything less than professional risk management and you will not win at this game. You won't live to see the next week or the next month unless you protect your capital. Right, few things. Markets move sideways 80% of the time. So I've made that point because if you're trying to trade breakouts, then good luck, because you're only going to get breakouts 20% of the time. So that's why you know, looking for your daily profit, your daily income, and then closing your account and not spending hours on end and trying to trade every move. That's when you will make the most in a market like oil. All right, trading is counterintuitive. The best trades sometimes don't feel right. If you've got a system, excuse me 1 second, my throat still needs clearing. If you've got a system, then counterintuitive trades will become second nature to you, because they become part of your system and not part of a mental battle that you'll end up doing. Okay, so if you're trading a system and you are used to that, and you are taking those sometimes hard to take trades when the market's going against the direction that you want to trade it, in other words, a pullback. When you're used to trading that, you know that you're in the zone and you know that you've reached sort of a professional standard. If you struggle with that, that's something that you'll have to work around, and you'll need the discipline of a system to really get over that. Okay, so why is oil so good to trade? Several reasons. First of all, oil has volume, unlike gold. Gold is a very light market because it doesn't have an industrial use, at least it has a very minuscule industrial use. So oil has greater volume. You're looking at 100 million barrels of oil traded a day. So it's a very liquid, very technical market, and that's what you want. So the daily range is at least 300 pips each way at the moment. So you could get a 600 pip round trip if you're prepared to spend X amount of hours at your screens. But the main aspect of oil is it's these weekly inventories. They give you a fixed time in the week to focus on oil, and the outcome of that inventories is not a matter of what the inventories is. You know, whether it's a big build-up in stocks or a drawdown in stocks, it's about how the market reacts to those inventories. And as with any trading, that is what we've got to focus on. So we'll talk about that briefly. So it's a fixed point in the weekly cycle. Once you've got that point, quite often day trading oil on Thursday and Friday is much more straightforward, because you've got this week's invents out of the way, and you've got the price band of that particular week's invents. So that's key. In no other market has that, apart from obviously natural gas has the inventories. Obviously, the Dow has key major data points during the month. You've got monthly jobs, you've got the Fed interest rate decisions. Tomorrow we got inflation, but you haven't got something as stable and as regular as weekly inventories that you got with oil. So for me, that is a little gem that really makes a difference with oil. One thing I've not listed on here is I tend to trade the oil in the old pit sessions. Obviously the pits are long since gone now, but in 2005, and I can't remember when the pits went now, but typically the main volume in oil comes in at 9 o'clock Eastern time, 2 o'clock UK time, and the old pits would close at I think it was 7:30 UK time, so that would be 2:30 Eastern time. So that's another crucial aspect of this, the fact that that window to day trade oil is quite narrow, which means you get a condensed amount of trading in that period. OPEC meets tomorrow. That's another reason for not day trading oil. And you don't need a big account to day trade oil. You don't have to trade the futures. One contract is in a 1 cent move is $5. So it's one contract is a high leverage. You can't get many contracts now. If you're spread betting, you can go as low as 25p a pip. So you could trade oil in an account with only 300-400 quid in it. All right, so that's why I like oil. So let's move on and look at the actual strategies. So the strategies that work in oil are as follows. You've got gaps. Look at how the gap affected the trade today. Invents, we're talking about this three-wave move. This is the three-wave move I apply to the Dow in the on the big events as well. I use NYMEX, yeah. What's ETH? I don't know what ETH is. RHT or ETH? Yeah. Eastern time, yes, Eastern time. What's RTH? Right, okay. Oh, got it. Okay. No, I'm old-fashioned. I just use the 2 to 7 o'clock period. because I grew up in at the time when the pits were around. So once you've got, like I said, once you've got the invent range on a Wednesday, how the oil market reflects on that. And last week, we had a tap on the invent range on Thursday on the high of the invent range, and the oil just went. This week, the same range. I'm still using last week's range. This week we are trading below the invent range, and we tapped it. We broke down, faded it, and got, I think it's significant. Well, I'll go and show you in a minute. And of course, I'm not going to go through this, but there's an extension zone that you can use to, if you get an intraday reversal in oil. But the whole point of all of this is, back to that second slide, it's about taking the emotion out of trading oil. It's about having a system and being totally prepped in oil day in, day out. This says last week's invents here. This is not last week's, this is an old slide, but I've left it on there because it makes the point. It makes the point that a three-wave move, let's talk about the three-wave move first. So this was invents, you can see it's quite a while ago because it's $42 here. So this is last year sometime. That's the initial invent move. So when invents came out, so prior to invents, oil was tipping up. Invents come out and it slams down. I think this is a 5-minute chart. Anyway, there'll possibly a 15-minute chart. So yeah, 15-minute chart. So notice we've got a gap here. So there's two aspects of this. A, you've got a gap to fill, and B, you've got a directional move. So this is wave one. So I'm not interested in wave one. I'm not even interested in wave two. What I'm interested in is wave three. So you've got impulse, pullback to direction. Now notice how the direction, so you gap fill, enter the trade, stop above the sessional high in this case. So that's actually a relatively tight stop. I suspect that's only about a 30 pip stop up there. And notice the actual direction is about twice the distance of the actual impulse wave. So that's quite typical. Oil tends to do, on the pullback, it tends to do 100% move. You tend to get a complete boomerang on oil, whereas in the Dow, you tend to get a sort of 50–60% pullback on most trades, but oil tends to do 100%. All right, so that's one aspect of the oil. Let's come out of these slides and go to the charts. So this is oil on the weekly at the moment, and you can see we've had this fantastic move up from a buy signal back here in December, wasn't that the last move, and we are now struggling on, this is a weekly chart. So you can see I've got an extension up here at 121. We breached that, I can't remember the exact, I'll tell you in a minute. We breached that, closed lower, we've got a little gap down, gapped up here, and we've just been touching the gap here on these lows. But obviously we're having a series of lower highs now. And so it's all to play for here at 98.40, 98. If this level here, this 95 can't, I suspect we'll see 95 tomorrow. If that breaks down, then this could be over, and we could be coming right back to 77 or the 80 mark if we break down here. Anyway, that's so that's the analysis, the longer term analysis. If we now drill down, if you look at the daily chart, This is a closer look at how that extension is working. So this was perfectly saleable at $110. Of course, we're under the $100 mark now. And here's the structural support. That's the reason why I started buying this level down here. So this is why I'm suggesting we might hit 95 tomorrow, because that will do a full-blown test of that support. Let me just check a couple of other trades. Yeah, okay. Right, so let's look at the 10-minute chart. Right, let's put the couple of things to note on this 10-minute chart. I don't trade off a 10-minute chart. I'm not going to, obviously not going to show you my system. What I'm going to show you are the critical aspects of oil. Critical point number one, that 109.60 is the Friday close. This 101.39 was yesterday's cash market close that you can see down there. So two critical pointers on this. You can see today we broke overnight, we broke down through the gap, pulled back to recover, sold into mid prior to the main market, and then pulled back into this range from last night, the Asian range, and then sold off. Okay, so we've got a 1, 2, 3 move, pull back into this range, broke out of it. So you could start fading this and shorting it around about the $102 mark. And had you done that and stayed in it because you broke the structure, and again, this move here is echoed in that move and a bit more. Had you done that, taken that fade setup, that would have given you in today's over 200 pips. Okay, so the wave count matters here. Right, let's look at. I thought I'd already set this up. Let's set this up for last week in invents. And let's look at let's go back to last Wednesday was the 4th. Right, here we go. That's Tuesday. I'm in the wrong period. Yeah, here we are. One thing to note last week. This is the invent range. One thing to note last week, we saw a build up in reserves. So normally, the relationship of the build up in reserves would suggest that oil would be weak. If you've got potential decrease in demand shown by a build up in supply, you would ordinarily, rationally and logically, you would say to yourself, right, okay, if the invents are coming out with a build up in build up in stocks, therefore oil is more likely to drop. Well, last week we had a build up in stocks, and I'll tell you exactly. Let's pull that chart over. Last week we had where are we? Build up of 1.3 million barrels. Build up of 1.3 million barrels. That was a build up from the prior week. And yet oil flew up. So that's why it's not relevant to make a note and be directed by the invents. It's the reaction to the invents you want. So by about 2 hours after the invents came out, we were closing above the invent range. So we had already had quite a significant move prior to the invents. We pulled back to a key level of support, closed above. So if we're closing above the invent range, you need to buy that level. That was 105.50 or 105.60, and then we pushed up into 7 or 8 o'clock. But what was key, you can see here on the next day, and quite often if oil messes around on invent day, then keep this marked up on your chart, because if you get what's called a fade of that invent range, then that's a buy. So at around about 5 o'clock the following day UK time, we saw a move into the high of the invent range, and that gave you a move from about 5 o'clock into the close of 105.60, a couple of hundred pips. There's a couple of hundred pips there. Now, you note that at the time, the best entry was after a significant drop. So that's dropped from over $110 to 105.60. So that's dropped about 450, 460 pips. Would I short that? No. Would I buy that high? Yes. And on Friday, it returns back. So you could, if depending on how your account's set up, you could hold that until that goes back to the range. And it took about 24 hours. Took about 24 hours to return for that 450 pips. So you essentially got a 1-2 wave move off the back of the invent high. Of course, you know, that's wave 1, that's your pullback, and that's wave 3. Okay, so if you look at the bigger picture, obviously. So we've talked about gaps. We'll do some more work on gaps in a minute. We talked about the invents. We've looked at the bigger picture, the weekly and the daily chart. I now need to talk to you about, let's look at this week's, because we faded the invent range from this. So if you notice here, we've picked up from it on Monday, midday UK time Monday, it nicked into the range and then popped out. But this time we hit resistance and that broke down, and ultimately, notice here on this, right, let me get rid of that. Notice here at 3:30 UK time on Monday, we break down under the invent range here, and then we go and test it. The very next bar fades it. So just as you would want to buy the high if it's holding, you want to sell the low if that is shorting. Okay, so this worked for 450 pips to the upside between Thursday and Friday. So if you did nothing else but wait until the invents were out second half last week, you would have got 450 pips. At the moment, I can see this is down here at 98.25. Had you sold that, I think it's about, well, let's get an exact measure. Had you have faded that 104.80 roughly, 104.78, 104.80, you would have got a good 600 pips. So you can see if you So between Thursday and Friday of last week and the 2 days of this week, you got close to 1,000 pips off of oil on the back of the invent range. All you had to have on your chart was the invent range and nothing else. So that's why that's one of the beauties of oil. It's a golden opportunity to trade oil based on what the market is doing around that data. Okay, so if we look at what's happened today, if we look at so here's the gap. So we started butting either side of the gap. This is every night at 10 o'clock UK time, they shut the market for an hour. So if you take that close and then put that on your chart, in fact, one thing you could do is put the open range on there. So that was the 11 to 12 o'clock range last night, and you'll instantly notice how that has given you an opportunity to sell into that overnight range. And then you break down under the gap at 3:30, 3:45. You go back to the range at about 10 to 4 o'clock, and we're still closing lower on the back of that. So that's your day's money by looking at the gap and waiting to see which direction it wants to go in that gap and then trading accordingly. So if this had happened, if the gap, if you closed up here, you'd be back to what you were doing last Thursday. You'd be back to buying that high and potentially going back to the invent range. Had that have held up, but it didn't. It broke down the structure, and we are still eking lower even now. I'm marking out the invent range. Sorry, I didn't see that question. I'm marking out the invent range from, in this case, on a 10-minute chart, the first 10 minutes after 3:30 on a Wednesday. So if you look here, it's 3 o'clock every week unless there is a bank holiday in the US. So it's 3:30 on the Wednesday, and I'm marking the first 10-minute range, 3:30 to 3:40. And then whatever happens outside of that range is going to dictate the rest of the week, and potentially, as in this case, the following week, until we get invents again tomorrow. So tomorrow I'll take this off now. So all I'm going to do now is wait and see what the invents do at 3:30 tomorrow. Not interested in what the data is. I'm not interested if there's a build up or if there is a drawdown. I'm only interested in the reaction. That's all I'm interested in. All right. So that is essentially, that's the basics of what I do. Now, what I do in the trading room is, so I run a live trading room. It's open 5 days a week, just for the open session and obviously invents. What I do in the trading room is we have a system to refine our entry, to narrow down the need for a bigger stop, particularly if you're using leverage. I don't want a 40, 50 plus pip stop. I want the tightest possible stop I can get without giving the oil the opportunity to stop me out and run. Okay, so we've got a system for measuring a finer input level, and a very decent, simple but sophisticated method of measuring our targets. And so our risk management can be that much tighter in what is potentially a lot of leverage that we're using. So back to the one final slide. Bear with me 1 second. So I'm running a workshop on day trading oil, and if you come in my workshop, you can come in my live training room for 3 days. It's a 4-hour workshop. You get check sheets, you get the whole system, you get a journal, and you get plenty of opportunity to do Q&A, and then and that includes 3 days live trading. So if you're interested in that, then contact me on using this information here. So that's my WhatsApp link and or my mobile. So if you want to book, drop me a line, send me confirmation with your email address, and I will get you booked in for this Monday session. So it's a 4-hour workshop, and it's recorded, so you will get your own personal recording for that, so you can go over it again. And then once the workshop's completed, we do simulated trading, so you can get used to the system yourself firsthand. And then we'll get straight into the room. Obviously, we're going to cover the invent session of next week. Now, if you want to continue in the trading room, that's an option. I'll give you details for how to continue in the trading room. But yeah, so that's it. That's what I'm looking at. That's what I do in oil. That's how you can trade oil. But if you want to join us and exploit these moves, then come in the workshop. It's good fun. Trading oil is brilliant. The volatility now is fantastic. And there's plenty of scope. I was going to show you some trades. I've just grabbed some slides. That's a bit small, isn't it? So the point I took this screenshot, I had 91 pips on the book on that one. 107 pips, and I was looking for a big move on this one. So I bought that at 104. This little blue line is my entry in the live account, and this line up here is my target. So I was looking for a move. I was looking for a 600 pip move there, and I had a 107 pip move as I did the screenshot. 51 pips as that one's lining up. 113 pips as that one's running. Just a recent trade. So a number of trades. Oh, there's a short. So I shorted this at 107.50 back in March. I had 170 pips, 167 pips on the books in my account as I grabbed this one. And now you can see the gap here. Just pinpoint the gap for you. There's the gap on and that's where my target is. So 167, 168 pips on the books on that one. Shorted it quite nice and high up here at 107.50. So you can see I've sat through a decent pullback here. That's moved into close to 106, pulled right back to 107, and then so it's got a 1, 2, 3 wave. So I've held out in that for this is a 2-minute chart. I've held out for the real wave down there. See a lot of resistance up here. It's a gap trade, so I was looking for a gap fill on that one. I've got a structural breakdown here. My stop is quite close, so I've left the stop away from the entry trade up there. Normally, once I get down here, then I would start to drag the stop down. Okay, so any questions? I've been talking a lot. I've not asked you if you've got any questions. Let's come out of that. I'll be running another workshop this time next week as well. I'll be talking about, got some other sub ideas lined up for next week. So I'll be back here next week if you want to join me for another quick 30-minute session. Otherwise, if you want to come in and trade with me, look over my shoulder, see how I'm setting the charts up, then drop me a line and we'll get you booked in. Yes, you can use IG. Actually, those screenshots I've just showed you are my IG account. So I've done some trades in IG rather than my futures account. Actually, I should have got some futures. Next time we do, if I talk about oil again next week, I'll show you some screenshots of my futures account and my futures ladder. I don't know if anybody here trade futures ladder? Anybody? The futures, it's the exchange itself. It's the NYMEX exchange. And on the NYMEX exchange, they have instead of just a buy and sell button, you look at the order flow, right? Okay. Well, this is the futures ladder is the sort of order book, if you like. You know what? I don't actually use 5 minutes on oil. I've shown you a 10-minute chart on oil. I use different time frames. If you want to come on the program, I'll talk to you about obviously the different fractals that I use, different time frames. But I don't, no, I don't use 5 minutes. Any other questions? Let's have a look at where oil is now before we go. Let me come out of this. Yeah, it's obviously trying to recover here. Where are we? 635. So possibly a bit of short covering here as we come into the close. Pretty nice pattern. It's nice and clear on that. This is a good clean day, isn't it? You could use that overnight range quite clearly. Doesn't always happen that way. This is a relatively calm day for oil. Normally you see a lot more volatility than this. It's calmed down this week. Oh, it's OPEC tomorrow, so I guess there's probably fewer traders hanging around as they wait for OPEC to come out. Now look at the one thing I haven't talked about is volume. Well, I mentioned it in the slide, but I didn't show you on the actual charts. You can see how we get an increase in volume as we come down here yesterday, and then you get a big bounce because that short covering, all the shorts have closed their trades and created a bounce. So that's a bit of a dead cat bounce just at the end of the session. Again, we've come down on volume here. Volume increased here and then spiked up here. And then all we got is a bit of closing of the trades as the day comes to an end. Okay, brilliant. Well, thanks for joining me, guys. Sign up, drop me a line if you want to chat. That's fine. If you want to find out some more details, I'll happily go through the modules with you and talk to you about what's involved in the actual program. Otherwise, if you want to join me next Wednesday for another 30-minute session, please do. Thanks, everybody. Good to see you, Dan, and talk to you soon.